Bitcoin was designed to be a decentralized and censorship-resistant digital currency, but even decentralized networks are not immune to disagreements. Over the years, debates about how Bitcoin should evolve have led to some of the most dramatic moments in crypto history. Bitcoin forks. A Bitcoin fork is more than just a technical update. It is a battle of ideologies, technology, and market forces. Some forks have improved Bitcoin, making it more scalable and efficient, while others have created entirely new cryptocurrencies that attempt to challenge Bitcoin's dominance. Some, like Bitcoin Cash, were meant to compete with Bitcoin as a daily payment system, while others, like SegWit, quietly changed the way Bitcoin works behind the scenes without creating a separate coin. Understanding forks is crucial for anyone involved in crypto. They impact Bitcoin's price, shape the future of its development, and reveal the underlying conflicts that drive the evolution of blockchain technology. Whether you are a long-term Bitcoin holder or just getting started, learning how forks work will help you navigate the unpredictable world of cryptocurrency. Many investors have found themselves unprepared when a Bitcoin fork happens. Some have missed out on free coins from hard forks, while others have failed to recognize when a fork might signal a major shift in the market. This video will break down why forks happen, how they work, and what they mean for the future of Bitcoin and the broader crypto landscape. A Bitcoin fork occurs when the blockchain splits into two separate paths, each following different rules. This happens when developers, miners, or the broader community disagree on fundamental changes to Bitcoin's code. Because Bitcoin is open source and decentralized, no single authority can dictate changes, which means that when consensus is not reached, the network can divide into separate chains. There are two main types of forks: soft forks and hard forks. Soft forks make minor backward-compatible changes, meaning that older versions of Bitcoin software can still operate on the updated network. These forks typically involve improvements to security, efficiency, or transaction processing without fundamentally altering Bitcoin's core structure. Hard forks, on the other hand, create an entirely new cryptocurrency that operates independently from Bitcoin. Unlike soft forks, hard forks require all users to upgrade their software to continue transacting on the new network. If a hard fork is controversial, two separate blockchains may continue operating indefinitely, creating competition between the old and new versions of Bitcoin. Understanding forks is essential because they can impact Bitcoin's security, transaction fees, adoption rate, and overall network stability. They also play a role in shaping the future of Bitcoin, as each fork represents a different vision for what Bitcoin should be. Soft forks introduce changes to Bitcoin's protocol that do not require all users to upgrade. They are designed to be backward compatible, meaning that even those running older versions of Bitcoin software can still participate in the network. This allows for smooth upgrades that improve Bitcoin's functionality without causing major disruptions. A good example of a soft fork is segregated witness, commonly known as SegWit, which was introduced in 2017 to improve Bitcoin's scalability. SegWit made changes to the way Bitcoin stores transaction data, allowing for more transactions to fit into each block. Because it was a soft fork, users who did not upgrade their software could still interact with the network without issues. Hard forks, on the other hand, involve permanent splits in the blockchain that are not compatible with previous versions. These occur when a portion of the Bitcoin community believes that a fundamental change is necessary and refuses to compromise with those who disagree. Hard forks result in the creation of an entirely new cryptocurrency that operates independently from Bitcoin. Unlike soft forks, hard forks can create uncertainty and market instability. Investors must decide which version of Bitcoin they support, and developers must determine which chain they will build upon. Exchanges must also choose whether to list the newly created coin, and miners must decide which network to support. Both soft forks and hard forks have played a role in Bitcoin's evolution, and both will continue to shape the future of the network. Knowing the difference between them is key to understanding how Bitcoin is governed and how decisions about its future are made. One of the most well-known Bitcoin forks is Bitcoin Cash, which emerged in August 2017. When the Bitcoin Cash hard fork occurred, Bitcoin holders were given an equal amount of BCH for every BTC they owned. Bitcoin Cash became its own independent cryptocurrency, separate from Bitcoin, with its own development team and mining community. Bitcoin Cash remains one of the most successful Bitcoin forks, but it has never surpassed Bitcoin in market cap or adoption. The fork showed that ideological differences within the Bitcoin community could lead to lasting divisions, but it also demonstrated that Bitcoin's core protocol is resilient enough to withstand these splits. The story of Bitcoin forks did not end with Bitcoin Cash. In 2018, Bitcoin Cash itself split into two competing versions, Bitcoin Cash, BCH, and Bitcoin Sub BSV. Bitcoin SV, short for Satoshi's Vision, was led by Craig Wright, who claimed it was the real Bitcoin that followed Satoshi Nakamoto's original design. Bitcoin SV increased the block size even further, aiming to support massive transaction throughput. However, the project was surrounded by controversy, with accusations of centralization and manipulation. Unlike Bitcoin Cash, which gained some adoption, Bitcoin SV has remained a niche cryptocurrency with limited real-world use. The Bitcoin SV fork serves as an example of how repeated forking can weaken a cryptocurrency's credibility as investors and developers grow tired of constant splits. Bitcoin forks often lead to market volatility as investors try to anticipate which version of Bitcoin will succeed. Some traders buy Bitcoin before a hard fork, hoping to receive an equal amount of the new coin, while others sell, fearing uncertainty. Forks can also impact Bitcoin's long-term adoption. If Bitcoin were to experience too many forks, it could create confusion among investors and businesses, making adoption more difficult. However, Bitcoin's resilience has been demonstrated time and time again, and no fork has ever come close to overtaking it. Bitcoin's evolution is far from over, and as new challenges emerge, more forks are likely to happen. Some developers argue that Bitcoin needs larger blocks, while others push for privacy upgrades, smart contract functionality, or better energy efficiency. As long as disagreements exist, forks will continue. However, not all forks will gain widespread adoption. The success of a fork depends on community support, developer commitment, and real-world use cases. Bitcoin forks are more than just technical upgrades. They are ideological battles over what Bitcoin should become. Some forks have led to meaningful improvements, while others have created division and confusion in the community. For investors, understanding forks is essential because they can impact Bitcoin's price, market stability, and future trajectory. Whether you are a trader, developer, or long-term holder, staying informed about potential forks will help you navigate the ever-changing landscape of cryptocurrency. The question is not whether Bitcoin will fork again, but when and how it will happen. Every fork tells a story about Bitcoin's evolution, and the next one could change the future of crypto forever.